Good evening, all of you. Is it audible?
Yes.
All right. Yeah, it's always a risk, and I'm sitting in between two stalwarts who have hobbies which I'm so jealous of. And it is a further risk if it's the last session before the ACFA. We'll try to make it as short as possible, however, with your support. The session is titled Transforming Insurance and Financial Systems. As a country, as we move towards the Vikasit Bharat 2047, a transformation of the insurance and financial system is not just an economic necessity. It's a structural imperative. Insurance penetration, a long-term financial or capital formations, social protection, or even climate resilience, all of these are deeply connected pillars of a developed nation. Today, we don't have much time to discuss all of this. We will be looking at two of the important pillars. One is on the reinsurance, which will provide an aggregated risk support for the insurance industry, which will eventually help achieve insurance penetration. And the other pillar is about how we can look at pensions and the pension reforms, especially from the country's perspective. We are the populous nation. We have a very young workforce. They are aging quite dramatically. Very important solutions that we're going to look at. So this session will explore the changes reshaping both the reinsurance and the pension markets. We'll stick to that. Any further topics we will discuss outside the session. This session will also cover how AI is interplaying into these areas, both on the reinsurance advisory and client outcomes, some of the strategic implications and the evolving regulations, the major shifts that are underway across these systems. Also, as Arunji, I'd like to briefly introduce both of them, which it's not part of the introduction made by the MC. He's also the adjunct professor in Georgetown University at Washington. He's having both the academic as well as the industry experience. He will be talking about pension security. We call it as India's, is it? Yeah. It's an inflation-linked deferred income annuity-like securities and how it can be applied to India and whether that will create more solution or an innovative solution to address the retired income needs. And Shailendra has also worked on the agri side of the business in Singapore. So more relevant, he's come over here to India as the CEO of the Reinsurance Solutions. I look forward to his views as well. We start with a few questions and later Arunji will have a small presentation. I'll start with Arunji, if that is okay with all of you. I just want to understand from you, Arunji, now that we heard about AI and we are hearing a lot of noise signal about AI, how do you think the AI is either changed or expected to impact the insurance and financial markets, and more importantly, from the India's perspective? Your thoughts?
Thank you, Arun, for that very kind introduction. My first job actually at the World Bank in the mid-1990s was to manage a defined benefit pension plan, which all of you as actuaries know is about making sure that your assets match the liabilities, which is the promised pension payment. And when the tech bubble blew up a lot of pensions globally, the first thing I realized was that in a funny way, managing pensions is about converting data into decisions. And so I set up my company, Mcube Investment Technologies, to actually have probably what was the first big data / augmented intelligence business, which was how does the head of a pension fund make sure that they're properly hedged, make intelligent decisions. There's data coming out at a very rapid pace. And so that was one of the early iterations where we were trying to help chief investment officers of pension funds, which is now a growing business in India, make better decisions. But the current revolution that we're seeing with AI, which in some sense removes the human from the process, is just transformational. And I think the people in charge of insurance company portfolios who don't adapt that process in some fashion, whether it's machine learning or reinforcement learning or some other variation of AI, is going to be left behind, because the data that's coming out that can be processed by these engines, if they're well trained, can truly make the job of a chief investment officer extremely simple and very robust with all the protections that you'd want to have within the regulatory framework.
So you feel it's significantly impacting, and in fact, in a sense, it's going to help spread the business or the solutions to the customer.
Absolutely. In fact, the reason I go back to teach young people is I've told them that if they're not AI proficient, they're not going to have a job. They're just going to be overpaid truck drivers. Because the engines that you have today are so powerful that they're able to process reams of data that the human can't handle, learn on the fly, without any human intervention, and actually produce incredibly good output for whatever you train the program to do for you. So if you're managing complex liability portfolios for which you have to have effective hedging and return generating processes, AI is transformational, and I think it's the next generation. I started my business when the internet came up. This is leap years ahead of where the internet was in terms of transforming the financial services business.
Okay, thank you, Arun, and I'll get back to you. Meanwhile, I thought I'll also take the views from Shailendra on how the transformations are happening on the reinsurance side of the business. How the AI is impacting and how the reinsurance advisors or the business is collaborating or incorporating the AI into their work. Your thoughts?
Yep, thank you. So I think, especially in the Indian market, reinsurance advisory or a technical advisory piece is still quite young. So maybe I'll start off with giving a bit of an understanding of what a reinsurance intermediary advisory does. In India, the major objective for a reinsurance advisor is to solve challenges of our cedents, which is insurers. And if we look at the Indian insurers, there are primarily three challenges that they are facing at the moment. The first is growth. Every Indian insurer wants to start growing. They are growing, but they want to grow more. They want to offer new products to the market. For example, on the non-life side, Indian government has announced significant infrastructure push. So with that comes reinsurance capacity for engineering, reinsurance capacity for surety business. So reinsurance advisors or reinsurance capacity helps Indian insurers to grow specifically in the new line of businesses. Second challenge that the Indian insurers are facing are related to profitability and capital management. So RBC is coming up. There are discussions going on that how reinsurance as a tool will help them get more capital, will help them become better combined adequacy ratios. So that's another second big challenge. Profitability, we all know, it's challenged. A lot of non-life insurers spend significant amount of money on their reinsurance protections. So one of the biggest companies in India, private companies, their average retention is around 45%. They spend 55% of their business gets ceded to the reinsurance market. So reinsurance capacity building directly affects their profitability as well as what capital they can put. Third challenge is really talent. All of you are aware in Gift City, we are expected more than 20 reinsurers will be set up by 1/4. There is dearth of talent. There is lack of reinsurance talent that exists in India at the moment. And for us, as reinsurance advisors, we have talent solutions team that helps solve those challenges as well. So the question is, how AI is helping us to add that value to our insurance companies or insurance clients. So I'll give you some stuff. So, when we are pricing a risk or when we are placing a risk, as we call it in our reinsurance industry, the most important is first to optimize that reinsurance structure that the insurer is buying and then transact that optimized reinsurance structure in the best possible way in the reinsurance market. So when we are optimizing those reinsurance structures, obviously we have got actuarial analysts to look at it, but we are trying to create efficiency into those things because when you're pricing a reinsurance risk, property cat comes a big element of it, where a property cat model is available. There's so much data that goes into analyzing a particular, what we call it, the dynamic financial analysis, and we are using AI to promptly optimize it even better and pass on those results to our clients at a faster manner and in a more efficient manner. Then it comes to reinsurance execution. So roughly in India, there are more than 250 reinsurers who are actively participating in the Indian reinsurance space. 24 insurers, 250 reinsurers. That's a lot of data points, that a lot of demands. So the point is, how do we use AI to make that transaction more efficient for our clients? So for example, on property cat XLs, which is a common purchase for non-life companies, it's primarily a commoditized product. You go into the market, you get the price, you do this. Now the point is, how do we make it more efficient? So when it becomes more efficient, more transparent, more capital comes in, more capital leads to better outcomes for our insurers. So it's really about creating that efficiency. And lastly, the price of reinsurance or the value of reinsurance, you only tend to get when there is a loss. When there's a big property cat loss or there's a big loss, that's when reinsurance really starts kicking in. Then that's when our cedents need the most help, because you want those claims to be paid faster. So when we as reinsurance advisors, when we book our policies or reinsurance contracts, what we tend to do is we tend to map out the whole process. For example, the reinsurance slips go here, and then it goes into our systems. But it is very important to use AI to fasten that whole process so that our final cedent, when he is in that loss-making scenario, when his capital will be tested, gets that claim at a very faster pace. That's how we are really using AI. It's because it's still a very B2B business. It takes time to incorporate AI, but what we are doing at Aon is really making our broking professionals, our analytics professionals, faster, efficient, so that they can provide better value and faster value to cedents in India. Hope that answers.
Thank you, Shailendra. I just wanted to pick up on 2 points that you mentioned. One on the gift city. And the second point is not that you have mentioned, but since you had from the agri industry, I thought I'll ask you these two. So how this gift city expansion can help the Indian insurance industry, your thoughts on that? And the second one, given the AI explosion and the way the data is getting stored with the satellites, how do you think the agri insurance can expand or go through a moderation or innovation?
So I'll answer the Gift City question. Gift City, when it was first incorporated, the objective of the government was really bring more things into India. So for example, a lot of things were getting done out of Singapore because it is so easy to get things, ease of doing business. So Mr. Modi wanted a similar kind of a concept, and that's how the Gift City thing came. Initially, IFSCA could get few reinsurers who were interested, but they could not get a massive scale. And now, if you see, for the past 1.5, 2 years, personally, I've had the privilege to work very closely with them to explain the concepts to the reinsurers, and they have really picked up the game. Reinsurers, every reinsurer, I think, in the world has heard of Gift City one way or the other. They have heard through their government channels, they have heard through their foreign channels, they have heard through almost every channel talks about Gift City now. Every big conferences will have Gift City representatives. The Gift City concept was formed when the reinsurers came was to bring outside Indian business into India. That was the original concept. But obviously India is a big market, which reinsurers wanted to tap, and that's how Gift City was set up. So what Gift City does, it does two things for the Indian insurance industry. One, it increases the capital for the insurers in India, and if it increases the capital for insurers in India, it increases the capital for the insureds in India, which means the penetration could go up, etc. Second, obviously it increases competition, so our cedents will get at better prices, easily to be placed. That's the second important thing. And the third important thing why reinsurers are coming to Gift City is also they see talent that's already available in the market. Yes, we do have challenges. Gift City doesn't have too many actuaries, for example, or data analysts, but that is, again, something that is being built up. So it's to to long story, it's going to increase the capital in India, make our insurers more competitive to provide better services to them, and also increase the amount of capacity building and research that goes into developing insurance products. So that's your first question. And second question related to AI on agriculture. Agriculture on non-life side, I would say, outside of after motor and health, would be the third most actuarially driven priced product. And the reason for that is because when the first guidelines came from agriculture, they came from primarily World Bank. World Bank had done a study for developing agriculture schemes in India, and the whole ecosystem was very data driven, right? A lot of doctors were working into it, PhDs, mathematicians, actuaries. So whole data analysis was very high on agriculture. So now AI would help, and I don't know if you know about the tender system in India. A lot of states go for tenders to win the business, quite similar to, I think, PMJJBY. So when you're winning the tender, usually it's very last minute. You get only 6 or 7 days to sift through all the data, so many files. So using AI, very likely insurers are investing so that they can get outcomes much more efficient and faster. You wouldn't believe there have been cases earlier where during the tender system, the pricing was done wrongly. And they won the tender, and there was no reinsurance capacity available. So now, why did it happen? The reason it happened was the amount of time that was given. Right? The whole ecosystem fell down, but now the time will still be lower. More states coming in, faster tender processing, better prices, better efficiency, and better pricing and reinsurance in the end.
Thank you, Shailendra. I'll get back to you, Arun. So given what you mentioned earlier for the first question, how are the customers and the pension advisors rather incorporating AI into their work? And I thought I'll also ask a further question on how the strategic and business impact of the system transformation can help the Indian pension industry, and your thoughts, and also based on the innovative solution you had mentioned. I would request your thoughts on the presentation that you have on that.
So first, let me address what impact AI will have on the Indian pension industry, because currently what the pension fund regulatory body is offering up to the Indian pension industry is so forward-thinking that they're opening up a lot of competition and creativity to the private sector to offer solutions. But India is such a complex country, and in fact, I'm doing research with one of your colleagues, Kulan Patel, where every Indian, based on which part of the country they live in, what gender they have, what educational level they have very different risk preferences. And if you think about pensions as being nothing more than matching somebody's retirement lifestyle to their risk preferences, if you have to be able to cater to 1.4 billion people, and let's say we even take 600 million people, AI is going to be the only way in which you can have customization of product by the private sector for such a diverse community. So I think AI will be transformational because right now the regulatory body is very supportive of creating innovative products. And for this audience, that should be music to their ears, that they're actually allowing you to be offering products that can be customized at the end point as well. So I think it'll be really interesting. So at a macro level, I think that's where AI offers a great opportunity to the Indian pension and insurance industry.
Thank you. I'd also request you to provide a brief on the India's,
Thank you again. And, Amit kind of scared you into being, nervous about even picking up your cell phone. And actually, I'm going to talk about an innovation that Brazil pioneered in 2023, which allows me to make a very bold statement right here, which is I think pensions is the most important insurance contract for you personally, for the industry as a whole, and for governments around the world. And if you think that's an overstatement, hopefully in the next few slides I'll convince you that this is the case, because I've been working on pension reform for 30 years globally. And I think India has, to Arun's question, has just launched a big bang with the pension fund regulatory body opening up the pension industry to incredible innovation. And so I'm going to talk a little bit about what they're doing, but also how the financial services market has to adapt, because otherwise you cannot have a Viksit Bharat and you cannot achieve Atmanirbhar and some of the challenges in the 2026 budget. So while the talk is focused on India's, which is a solution for India, because there are people in the audience from the ADB or the United States and the UK, I'll talk a little bit about the work I've been doing in those countries as well, because I am based in Washington, DC, but I've been talking to the UK government and other entities as well. So hopefully I can convince you that with an instrument like this, India could potentially create retirement security for this very vast and diverse population, which ranges not only from all of you who are educated and employed, but also to farmers, Uber drivers, the delivery people, or even your household help. And like I said, this is not pie in the sky. Brazil has actually implemented this very successfully in 2023. Chile did this in 2025. The UK is now considering it, and countries like Turkey as well. So if you haven't read this document, as an Indian citizen, I would strongly recommend you to read this. And it's in the footnote. It's the PFRDA consultation paper on what basically a good retirement should look like. And like I said, in my 30 years of working in this space across both developed and developing countries, I've never seen a more brilliantly and boldly articulated vision for what a pension should look like. Because as all of you as actuaries know, everything first starts with the liability. And in your own personal pension, the liability can be expressed very simply as, my goal is I would like to maintain my pre-retirement lifestyle once I stop working and I don't have labor income. And that's essentially what the PFRD has articulated, but they've then converted it into a series of achievable goals. And because I like acronyms, I've converted it into an acronym which I hope you remember, which is SARI FLIPS, which stands for, they want it to be a structured product, they want it to be adequate, generating real retirement income. They want it to be flexible, because a number of your young kids are probably working and they flip jobs or they flip cities. They want you to have liquidity, because you could always have a life event that disrupts your planning. They want it to be inclusive, so that the poor and the rich have the same access to a safe retirement. They want it to be portable, and they want it to be simple, because financial literacy isn't very high in a country like India. So what's amazing is this bold vision that your country has put out there is something that you as citizens can actually help achieve by potentially even lobbying your Minister of Finance in what I'm going to suggest is a simple innovation that India can create to address a number of its challenges. Like I said, I really enjoy using acronyms, and so this bond was originally created, and we called them selfies. I developed this with a Nobel laureate, Bob Merton, and SELFIE stood for Standard of Living Indexed Forward Starting Income Only Securities, which was a cute name, but I think India speaks to what this instrument really is, which is it's nothing more than an inflation-linked deferred income annuity-like security. In America, I now call it Trump bonds, which is terrific retirement under my president, but I think India's is a lot better. And what I can hopefully show you in the next 2-3 minutes is it's the truly only safe, liquid, low risk, low cost, inheritable, simple instrument that a government can create. And hopefully all of you as actuaries have heard about the annuity puzzle, which is a term that my advisor, Professor Franco Modigliani, articulated in his 1986 Nobel Prize speech, which is, why do people not buy annuities? Very often the reasons relate to their not being financially sophisticated and the instrument being complex. I try to dumb it down so that even somebody like me can understand this instrument. So here's the design in 2 minutes. And like I said, all of you in this room are going to look at it and say, it's so simple, why do we even need a presentation on it? What we've designed the bond to do is that the bond basically matches your liability in retirement, which is it pays you nothing till your retirement date, let's say age 62, but the government will issue a bond that has different start dates for everybody in this audience. At age 62, it only pays you coupons. There's no principal repayment, because if I want a steady income in retirement, I only want coupons. I don't need a big stub principal. But the uniqueness in this creative instrument that we designed, because I used to issue bonds for the World Bank as well, is every bond pays you 5 rupees or $5 a month for, let's say, 20 years, which is the average life expectancy of a country. And why did we pick 5 rupees real per month? Because if an Uber driver has a goal that they want to get 5,000 rupees per month in retirement, their only goal is they've got to buy 1,000 of these bonds before they retire. And they can track their progress all along the way, knowing whether they can retire early, they can retire late, they can do all sorts of creative things with this very simple instrument that embeds compounding, inflation, accumulation, and decumulation in one instrument. It's easily inheritable, so that if you die, your heirs get it. They can collect the coupon or they can sell it. If you change your retirement date, you sell it back to the government. It's all available on the cell phone, despite what Amit scared you about. They have a system very similar to UPI called PIX. The transaction is done instantaneously. You ask people only 2 questions: what's your target date of retirement and target income? And you press a button, and instantly you can buy this in slices of as little as 10 rupees at a time. Brazil has even created a gift card, so at Diwali you can give this to your household help, or at Christmas you can do that. And there's a QR code as well. I don't have time now, but as all of you as actuaries can realize, without such an instrument, there's no way an insurance company can offer a real life annuity, because if you don't have the hedging instrument, you cannot offer that contract to the individuals. So what we did is we took longevity hedging out of this instrument, but if this instrument is issued on an institutional basis, you as insurance companies can actually provide the longevity risk hedging on a real basis, because with nominal annuities, people's retirement is going to decline in quality because they don't have that hedge, right? So this, in a way, is a pure market-based instrument. There's no subsidies, there's no fudging of the price. And one of the things that the Indian government has very neatly articulated in the PFRDA document is, rather than making this bond only for 20 years, maybe there could be shorter payouts of 5 years at a time, which I think is very creative. So your government is doing fun stuff. Just to conclude, I'm a Tamilian who kind of failed Hindi multiple times in my school in Bombay, but my wife is a Delhi girl, and she had a beautiful tagline, which I'm going to leave you with, which is, Surakshit retirement zaruri hai, Bharat bond majboot hai. Thank you.
Wonderful, Arun. Thank you so much. It's quite innovative, and I think need of the hour for the country. I would like to request the audience poll on this particular instrument. Do we have the audience poll? Can we set up for this session? Meanwhile, I'll ask one more question to both of the panelists when the audience is engaging with the question. Arunji, and I just wanted to ask you about the actuaries. How do we prepare the next generation of actuaries for a digital-first pension system from your perspective? Now that you're also on the academic side, I would like your thoughts on that.
So, when I started my career in the 1990s, pension was either tied to your occupation and or your country, which meant it was very institutionalized and very employment occupation focused. And typically you were running large defined benefit institutional portfolios. Globally, everybody's now going to individual private pensions. And so I think the next generation of actuaries has got to be trained to potentially offer such advisory services, because ultimately pensions is just an asset liability management exercise. It's an insurance contract. How do I hedge the various risks in retirement? And so I think the next generation of education has to be about retirement planning, because that's going to be a core activity to cater to across the globe, not just in India as well.
Thank you, Arun. I think the first question, we're getting around 85% yes. Oh, yeah. And 15%, that's quite significant yes, isn't it? I mean, it's more than 75, 3/4. Can we put on the second question, please? Do we have a second question on the poll? Yeah. So meanwhile, I thought I'll request Shailendra to provide his views on how do we prepare or create the next generation of actuaries to help or enhance the reinsurance side of the business.
Okay, I mean, personally, because my career has always been on the non-life side of things, so probably I can provide you that perspective. The biggest thing that I find that a non-life actuary misses is the property cat risk. We've got a lot of actuaries who have analyzed motor, health, reserving, pricing, but in India is very strongly cat-prone territory, right? You've got earthquake, typhoons, you've got almost any calamity that's possible, it's extremely cat-prone. But we don't really see actuaries focusing on cat modeling. I think I met in APAC 1 or 2 actuaries only who have actually gone through that career of cat. But that's what reinsurance is being bought for. So if you want to be good at reinsurance actuarial on non-life side, understanding of property catastrophe risk is extremely important. How do you analyze it? How do you understand a little bit more? I had a client here, and the first thing she talked about to me was, I understand all the concepts, but one thing that is really missing is this black box, which is called the CAT model, AIR, RMS. And I was quite happy with that comment. We were discussing, and she said, I really would like to understand that. Because till the time I don't understand it, I would not be able to purchase better pricing, etc. So that was primarily on the property cat. So now, if you were to translate into AI, which was your question, how to prepare for it, I guess just study harder. So not only do your exams, do a bit more Python, SQL, C++, all those fancy stuff that I am an engineer by background, I used to do. So if we combine all of that, I think that's going to be very powerful.
Very practical. Thank you, Shailendra. I think for the second question, we are getting around 70%, a significant yes as well. Arunji, I think we should take it to the government and just get this done fast. Thank you. Yeah, I think the time is up. But however, I'll request 2 questions from the audience. And I'll take 2-3 minutes extra. Any questions from the audience?
We request you to please raise your hands in case if you have any questions. We can pass on the mic.
I think they're all ready for the ACFA, I guess. Yeah. Arun and Shailendra are around. I'm around. Any question that you have today, tomorrow, please feel free to ask us at any point of time. To conclude, Viksit Bharat is not just merely about a GDP growth. It's about risk protection, financial security, and intergenerational stability. At the heart of this transformation lies the actuarial profession, in fact. And actuaries are not just number specialists, as what Shailendra mentioned and Arunji mentioned. They are the custodians of long-term financial trust. The question before us as actuaries is not whether the actuarial pathways will shape Viksit Bharat, but how boldly and responsibly we as actuaries choose to lead that transformation. With that thought, I'll conclude this session and hand over to the MC. Thank you.
Thank you so much. Thank you, gentlemen. It was a wonderful panel discussion.